James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing. Wednesday was a day of positive and negative headlines regarding the COVID-19 outbreak as the World Health Organization said the number of newly reported cases globally hit a daily record. This comes despite governments around the world attempting to ease lockdown restrictions. The positive side shows that in Europe and the UK, infection rates were actually starting to slow down drastically. The choppy, volatile week continued on Wednesday as we yet again saw global stock markets reverse the previous day's move. The Dow Jones and S&P 500 both ended higher while stocks in Asia slipped slightly lower. The indecision looks set to continue into Thursday's session with both US and European futures markets currently pointing to weaker opens. Oil prices have edged higher yet again after Wednesday's oil inventory data fell for the second consecutive week, easing the oversupply issue and showing more space for storage as demand picks up due to the easing of lockdown restrictions. Rolling cash WTI oil prices are now sitting at a stable $34.30 per barrel, while the new July contract also sits at that similar level. This afternoon we will get the key initial jobless claims reading as markets are set for another dire number. Expectations are for another 2.4 million Americans to have claimed job seekers allowance over the last week. At yesterday's FOMC meeting minutes, we saw the Fed had concerns about the unemployment picture, obviously, but Jerome Powell has previously stated that the unemployment picture in the US could hit around 25%. The minutes from April's rate-setting meeting also showed that there is deep concern not just about the current state of the economy, but also what lies ahead. Investors continue to ignore the economic warnings, buying into stock markets. Even this week, while we have seen a mixture of volatile movements, the upside moves have been stronger than the downside. The Fed also warned that the amount of bankruptcies for small and medium-sized businesses could well put enormous strain on the banking sector. This morning we will see some key data out of Europe and the UK as the flash PMI readings are expected to show all sectors of the economy are still struggling. However, we do expect a stark improvement from April's data as composite, manufacturing and services PMIs are expected to post higher readings. In the previous months we have seen them drop into the low teens, and any number above 50 shows an increase in output in these sectors. And while we're not seeing an improvement that shows the sector increasing, we're at least going to show numbers that show it improving.